I'm here with the founders of Atlassian, Mike Cannon-Brooks and Scott Fakwa. And also, sorry, I did pronounce that right?
Yes, you did.
And also Accel Partners, partner Rich Wong. Hey, guys.
Hey.
So you're here because you just raised $60 million from Accel.
Yep.
Rich is the lead partner from Accel. It has joined your board of directors, I assume.
Mm-hmm. Yep.
And the most interesting thing is this is the first time you guys have raised money. You've been profitable for just when did you 2002. You've been profitable the whole time. Yeah.
Yep.
Why did you raise money now?
You want to take it?
You go, mate.
Take it.
All right. So, I mean, we had a good look at the future, really. We spent some time thinking about what we'd done and what we wanted to do over the next 5-10 years, and decided that that was the best path for us to go down, to bring on a partner to help us go forward. Wow. Some of the big challenges we have. Okay.
So, why did you raise money from Accel? To move forward? That's the path you wanted to take? Well, I didn't even know. You've been profitable from day, you did 60 million in revenue last year. Or this year you'll do 60? What
last year.
Last year you did 60 in revenue. But I heard that was like 130 last year. Are those numbers a little bit low? Are those, I had heard exaggerated numbers, I guess?
You probably heard exaggerated.
This is all US, by the way.
Yeah.
Right, this is all US. This is all US dollars.
Yeah. And you've been profitable since day one.
Yep.
How much total revenue has the company done to date?
140 million, roughly.
Okay, and how much of that, like how much profit to date?
We don't release that.
It's a good profit margin and quite a profitable business.
So you didn't really need money?
No.
Okay, so why did you take money from Accel?
Because we needed advice. We needed counsel. We needed a partnership.
And you wanted to take some money off the table in a tax advantageous way, it seemed like. You took some of this off the table, right?
Sure, that's always part of the reason.
Yeah, how much of it did you take off?
But also from Accel's point of view, they're investors, so they're not going to... We tried to get their advice for free, but they weren't willing.
Rich, why did you invest in this company?
I think it's pretty straightforward, right? I mean, I think, how many other companies do you know that start with like $10,000 of credit card debt, profitable for 8 years, 59 million, 20,000 customers? You know, I think it's pretty straightforward, you know, why you would be interested. I think the honest truth is, you know, I called these guys for about 2.5 years. There's a lot of,
I'm
on the spam
VCs.
filter of Mike and Scott. We've been to multiple Atlas camps and summits and a lot of brethren.
But you went through a lot of pain you went to their events.
We did, we went to a lot of events, definitely. And we went down to Sydney. I like Australia, so it wasn't a hard thing to come down there. And we'd sit in front of the doorstep, and every once in a while they'd let us.
Are you guys in Australia half the time? You're here all the time.
About 3/4 of the time. So about 3 weeks down there, 1 week up here.
Okay.
On average.
Sorry, so you've been after them for 2.5 years. I know a lot of VCs have been trying to invest in you guys because it's a great story. But
well, I think to simplify, there's the metrics that we talked about. You've already written about the metrics, the customers. And I think second, these guys have pioneered a totally different model for going after business software.
Yeah, they're the sales force.
There's no salespeople, right? There's no commission salespeople, and how do you get to 59 million in sales?
So what does a company
without
do?
Salespeople?
It's a bug tracker. It's a little unclear to me. Like, how do you have 20,000 customers and all this revenue with a bug tracker?
So broadly, we sell products to teams that make some sort of products, right? So we build collaboration tools, workflow tools, even now to code review,
But is
right?
all your revenue from the bug tracker still?
No, less than half our revenue is from the bug tracker.
Half from and that's called Jira?
Jira.
Okay.
Yeah, that's our first product we ever built.
And the collaboration tools you launched in 09, 08?
No, we've had
collaboration tools in 04.
04.
Oh, there's a
wiki,
something we
Confluence.
There's some big news in like 09 about you. It was last year about you guys, some big open platform or something.
Yeah,
open social.
Oh, well, that's the Google. I mean, that you
were.
Right. You were
so we have open social integrated in all of our applications.
So basically, developers
to allow
use
them to
you
exchange
to help them
information.
build software.
That's correct. Yeah.
Was it just a big gap in the market before you guys came along and you filled it, or are you just cooler than everyone else? Like, how did you how were you so successful so quickly?
I doubt we're cooler than everyone else.
We're gonna get to that in a minute, but yeah.
I would say that we take
some of the stories I know about you guys, but anyway,
we take a more modern approach. So we sort of bring that consumer web, more social aspect to the product development process, which is the thing about people building software in enterprises is it's a team of people. It's not like a couple of developers. There's all sorts of other people involved in that process, from
the
BAs through to technical writers, through to the designers, UI architects, business people, and it's a very collaborative process, right? They've got to all kind of get together, and what we help them do is that collaboration, be it on the technical side, on the documentation side, on the textual side.
So
Mike, I'm going to jump in just if I could just make
you
two
jump
points
in
right
anytime
here.
you want. Yeah.
So I think, first of all, I think, a lot of people talk about taking consumer marketing techniques to sell business software.
Yeah.
But very few people have actually done it, right?
Right.
Very few people have actually figured out a way to scale it. And so, these guys have this program called starter licenses, right? So that for $10 literally, you can get a license up to 10 users. So no surprise when I dig around, whether it's Accel's portfolio or other people's startup portfolios, almost everybody's using Jira or Confluence or Greenhop or one of these products because it's basically free, right? And that the $10 these guys actually donate to charity. And so I think that's a very, it was a program you guys launched last year?
Yeah, we've raised $500,000 so far.
And you donated it to charity?
Room to read.
Yeah,
So it all goes to Room to Read. So we've built.
And you guys aren't like paid executives of that charity, right? It's a
No. It's just
501c3 organization.
We came into contact with Room to Read a couple of years ago. We got to know John Wood pretty well.
I love that I can accuse you of like gross financial malfeasance, and you just like
just gonna let it slide.
totally cool about it. Yeah.
Hit the wall.
No, but that point is that very few people have figured out how to compete with free, right? And open source and do it yourself are the competitors for a lot of these tools.
Yeah.
But almost nobody's figured out how to compete effectively with free. But using the starter licenses and then getting people to upgrade, beyond that, is a pretty darn smart technique. A lot of us talk about the theory about that, but very few people have actually pulled it off, right? And so
but they have.
That obviously is something that impressed the hell out of us.
So, okay, so revenue's growing 30% a year, sort of year after year after year. So you'll be at, I don't know, what's 30% of 60? It's $80 million, something like that.
Something like that.
Yeah.
Yeah, I mean, you feel good about that, and obviously IPO you're aiming for.
Mm-hmm. Yeah.
And you would be the two most senior executives of this publicly held NASDAQ listed company.
There's a long road to go between now and then,
I
but we'll see. We'll see when we get there.
Did you have to agree with Rich that you would bring in, adult supervision to this organization, or you're?
Actually, well, to be honest, we told him that we were thinking about bringing in adult supervision, and he told us not to do that.
Don't mess with the formula.
Don't mess with the formula.
Okay, so let's.
Right? I mean, why mess with it if it's working? And obviously, we're going to try to help and bring on hopefully complementary people that these guys decide are the right ones. But yeah, it's working.
You have 225 employees.
Yeah.
How many of those are engineers building software?
About 160.
What do the rest do? Big buckets.
Support and marketing.
Okay. So let's talk a little bit about the storied past of Atlassian. If you don't mind. And this part we can have off record if you want.
I'm intrigued by the storied past.
So you guys have been like the coolest guys in Silicon Valley because you roll in here like I said, every 4 weeks you're here, and you're social and you're out. And there's been a number of times I've turned down parties that you've had or been at, and people like you. You're very charismatic and all that. This isn't the buttering up phase, by the way. But generally people like you. But you guys are like, you had this hot company, you never raised money, you answered to no one. Those days seem to be maybe over now. I mean, you do have somebody who's invested real money in the company.
A minority investor, to be clear.
Sure, but are you you guys gonna be able to keep being the fun social guys that you are, or are things gonna change now?
Well,
I think Mike stopped being fun and social. I mean, he got married recently, so I mean,
I got married. I became boring.
That was a bigger change than bringing on an investor.
No, I would say that. I mean, these guys.
So the partying stopped when you got married.
No, it started when I got married.
Ask him about
that
last
was
night,
the start of the party.
What? Okay. So what happened last night?
We had an employee
We had a party.
celebration.
Look, this is their company to run. They
It
know
doesn't
what they're
seem
doing.
fair to
They're
start
making,
a company.
they're making progress.
I got to say,
We're just trying not to screw it up.
One of the things we screened for very hard in hiring a VC, and we thought about it as a
I
hiring
love
process.
that. That's right.
No, we thought about it as a hiring process, right? We're picking a partner who's going to be here for 5 years. We're going to pick the right one, right?
Yeah.
And we spent a lot of time, did a lot of due diligence, and one of the things we screened for was we have our existing business model. Obviously, we have a set of values as a company. We have a sort of a culture that we want to maintain. Yeah. And the question was, did they want to change that or did they want to keep it? Right?
And
if
some
they
VCs
valued it,
wanted to change it?
sure. Some would say this is really nice, but I think to go forward, you're going to have to do this and this and this.
So would you have chosen a different VC if they had been more willing to accept your culture? Or were they the top VC anyway? I mean, Accel's the top VC, there's no question.
No, I mean, and we were fortunate enough to have access to some great firms, right? And to talk to some great firms.
Down?
A lot of great firms.
Like?
We've got about 100 firms on a spreadsheet.
They all wanted to invest.
I mean, this is over 5 years.
Okay.
We keep a spreadsheet.
But I know that VCs have even come to me because they know I know you guys and they've asked for introductions. And I mean, I know that there's been a large amount of interest in you guys.
Sure.
You're one of the good stories. So, okay.
So, but I mean, so we had to pick a partner that valued. I mean, they're investing because they value the culture that we built up so far.
And the culture being the camaraderie in the office, the way you do business, but also the occasional week-long round-the-world parties, if you want.
I mean, we work pretty hard. I would go on record to say we put in the hours. So.
Yeah.
I think just to add the point, first of all,
I'm just jealous.
I completely agree with Mike, first of all, this Mike.
You guys turn down my invitations.
Well, we all throw around this phrase around Silicon Valley, right? We want to invest in authentic entrepreneurs and people that, don't take themselves too seriously, really like what they're doing, and are actually building a company to build it, not to flip it or to figure out how to find the next exit right around the corner, because those don't always tend to work out. And so I think when we got a chance to meet the team, I mean, these guys really believe, not just Mike and Scott, but the other people we met, they believe in the mission of the company.
Yeah, but obviously say that every time.
I know that sounds like BS, but
it is BS,
case
right?
It's actually true.
Every VC says that about every company they invest in every time. I mean, that's great, and I'm glad you believe that, but I mean, really just about every time. It's like, these guys, this is a team, we want to back. They're gonna, and then, a year later, it's like new CEO, and, things are bad, and you're trying to sell it, and not you, but,
I would say there are times when you really might love a space, but you feel like the team is doesn't have the track record and authenticity that these guys have.
One thing, any acquisitions? Like, you guys going to buy people, or you like building your own products?
Yeah, we've done 7 acquisitions now.
Oh, are those all these weird products? They're all acquisitions. Like Green Hop, what was it?
Green Hopper. So it's an agile tool. So you might know most companies these days, when they're product development, do an agile process.
Of course, yeah.
Yeah. So Green Hopper, we acquired that, and it's one of our fastest growing product lines.
You bought all these guys for cash, or they have stock? Are there a lot of people with stock? All the employees? And
all the acquisitions we've done so far have been with cash.
Pure cash. Do your employees have stock?
They do.
Okay.
All of them.
So more acquisitions?
Certainly. Yeah, we have quite a few people.
What are your top companies? What kind of companies are you looking for? No, so they know to come to you, right? So.
I think they'd be able to find us. I'm not sure.
I think most of them know that we're interested. The ones that we're looking at. So
if they don't know, they're out of luck. That probably means you're not interested. IPO next year, year after? Do you know?
No, I think we're in no hurry to IPO. We think that's a long-term exit for us, but
he's going to be in a bit of a hurry. I mean, after a few years.
I don't think so. Accel's a record of patient investment.
Yeah.
And we'll look at the other companies that you cover on occasion, right? In terms of the timing of their quote IPOs or not, right?
Which fund did you invest from?
This is a blend of the Accel Growth Fund and then also the Accel London Fund.
And how old are those funds?
Growth was raised in December of 2008, so it's a year and a half.
Plenty of time. Yep.
Yeah. And London was raised actually same time. Growth year and a half.
You got 6 years.
So we checked that. Yes. We did. You seem skeptical that we would have done a due diligence on this, but we certainly made sure that there was plenty of time.
The problem is, we need to wrap this up, but the problem is, and this isn't much of a problem. I know you guys socially more than, because
Sure.
IT, it's like, it's the muffler parts, right? I like looking at the whole car, and so it's not as fascinating to me personally, like what you guys do. And bug trackers, trust me. I mean, obviously there's money in it, but. So I just don't take you as seriously, I think, as other people do, because I know you more personally.
Right.
Also, you had an event where I was interviewed by a fake Tom Cruise actor. I mean,
you handled that very well, I have to say.
Fun. Yeah. So, thanks for your time. Any other last words? We'll probably edit this part out, but anything else you want to say? Nothing. Okay, great. Thanks very much for coming in. Congratulations.
Thank you.
And you took 30 of it off the table, huh?